With today's market and economic outlook, there's not a more important time to take a look at your own personal portfolio and talk about diversification. What we're going to do today is dive into different asset classes and talk about the importance of diversifying your portfolio. Welcome to the VIP Financial Education channel, where we help you go further, faster financially. I'm your host, Michael Matthey. Guys, this is a great episode today. It could not be more relevant with all the kind of noise that's out there, everything that's going on. We want to talk about multiple asset classes where you can diversify your portfolio, ultimately spreading out your risk to multiple asset classes to kind of hedge your bets. Guys, with this volatility of the market, do you want to spread your risk out? Do you want to spread your wealth out and ultimately not have all your eggs in one basket? So a lot of people out there, and rightfully so, are just kind of risk averse. Myself personally, I'm not, so I can't own or claim that. I've always kind of put my money into things that were kind of cutting edge, if you will. I've always read the tea leaves. People that make the most money are the people that understand the trends. They get out in front of them first. So when we talk about diversification, we're talking about, people that want to mitigate risk. And again, nothing wrong with that, but they want to spread it out over multiple asset classes so that if one were potentially to collapse, obviously they've got backup plans. And those of you that had your money in real estate in 2007, myself being one of them, I'm not ashamed to say it, you understand how this works. I love this quote from Nobel laureate Harry Markowitz. Once described diversification as the only free lunch in investing, meaning investors can receive the benefit of reduced risk without diminishing their returns just by diversification. What Warren Buffett says is actually on the contrary to that. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Guys, I could make points and counterpoints to that. The reality is, on this channel, we've got people that are considering getting into investing, irregardless of what asset class they may be. We've got newbies, those that are kind of sticking their toe in the water right now and maybe, starting to get a little deeper into that. And of course, we've got savvy pros on here. I've talked to a lot of y'all that, are very technical, you're very advanced in your investment careers. So what we want to do is try and provide information that kind of appeals to all different folks. And while we're on the quote train, I'm going to quote billionaire Jeff Yass. He says something very different. He says, if you invest and don't diversify, you're literally throwing out money. People don't realize that diversification is beneficial even if it reduces your return. Why? Because it reduces your risk even more. Therefore, if you diversify and then use margin to increase your leverage to a risk level equivalent to that of a non-diversified person, your return will probably be greater. Guys, we're going to talk about leverage here a lot. Leverage is going to be important in any type of asset class. It's just important in life in general, whether you're working a W-2, whether you are a self-employed business owner. In fact, I'm working up a video on specific leverage at this point, so this could not ring more true, but it's a very, very powerful tool. That being said, let's go ahead and dive into the different asset classes. Of course, we're going to start with real estate, which is my background, my specialty, my baby. And of course, we continue to talk about real estate here on the channel, folks, because it's so relevant right now, just in the times. Obviously, it's one of the most popular asset classes out there. It's also a tangible or a hard asset, meaning, as opposed to putting your money into the stock market, for example, you have a tangible item that you are in control of. You don't lose money on something unless you sell it. So obviously there's going to be ebbs and flows up and down, obviously, with real estate, but that's something that's tangible. You can actually reach out, you can touch it, you own it. That's something you can own from now until the end of time. Number two, we're going to talk about cash and cash equivalents. So obviously we've done a lot of videos on the channel here about cryptocurrency, cash equivalents like Bitcoin. Obviously they've been quite volatile recently, and particularly with inflation, everyone's kind of looking at these right now. And of course, because of that, cash is just not looking so hot. I mean, right now to take, a substantial amount of money and leaving it in a checking account, for example, makes very little sense. With inflation rising, obviously that's going to be detrimental to retirement accounts. People are going to have those wiped out. We're at really record high inflation rates right now. So something certainly to be cognizant of when we're talking about cash and cash equivalencies. Again, I've got a small position in crypto. Particularly with Bitcoin. I'm a long-term hold with that, so I don't necessarily watch it go up and down every day. When it does go down, I continue to buy more. When it goes up, I hang on to it. When it goes back down, I certainly don't sell. And along the same lines, there's so many what we call meme coins, or quote unquote, and I don't like to swear on the channel here, coins, so people are out there, they're kind of falling for those traps. Anyone that's out there in the crypto space right now can identify those pretty quickly, but particularly if someone is a newbie trying to get into digital, do your research, talk to experts. We're going to try and bring as much of that information on the channel as well, but obviously do your own due diligence. Next, we're going to talk about one of my all-time favorites. We're going to talk about commodities. Now, a commodity, simply put, is something that is sellable, something that is tradable. Effectively, anything that someone is willing to sell or buy would be considered a commodity. Things like natural gas, oil, gold, silver, coffee, produce, all of those things would fall under the commodity category. If you're looking again at inflation, those are certainly things you want to be cognizant of when dealing in buying commodities. I've got a great quote here about the gold market, the gold commodity market. I'm going to read off. And this is according to Goldman Sachs analyst Mikhail Sprogus. Over the past several months, gold has been strongly correlated with the inflation fear factor. Guys, we're going to drop that inflation video below. Prices therefore corrected sharply after the hawkish Fed surprise, which our economists interpret as the Fed taking a more backward-looking approach or interpretation of average inflation targeting. So a commodity like gold can be strongly correlated with fears over rising inflation, of course. The thing that's great about commodities is that's something that you can really read the kind of global tea leaves on. So it's something that you have ready access to. You can take a look at the ebb and flow of prices on the global market and obviously make decisions based on that. Next, we're going to talk about U.S. equities, which are going to be represented by the Nasdaq, obviously the New York Stock Exchange. Each one of them is going to represent a United States publicly traded company. These can be broken down into large, mid, small cap companies and can be categorized as either growth or value stocks. Ultimately, if we're talking about a diversification video, you want to have at least some portion of these kind of spread out within your portfolio. And obviously do your research on these guys. There's going to be a difference between risk and reward on these. So go out there and do your due diligence. Next, we're going to talk about bonds and fixed income. Simply put, a bond is a loan from an investor to a borrower. And bonds are issued by the government or corporations that are simply trying to raise money. Just take a look, follow the money. Where did all that COVID relief come from? You can really lead that back to bonds. By buying a bond, you're giving the issuer of the loan obviously the money, and they're paying you back on a fixed interest rate when it matures over time. You can be talking about U.S. Treasury bonds, obligation bonds, or municipality bonds. Definitely do your research on these just based on the market, based on economy phenomena. Obviously, each one's going to perform differently. Each one's going to yield differently. So definitely do a deep dive on those before you just kind of jump in, head first into those, of course. Next, we're going to talk about one of my favorites, which is global markets. So they're going to be just like the U.S. markets, although they're going to be traded globally. So these are international corporations that obviously within the United States, you've got the ability to invest into. And just like U.S. equities, they're going to come in multiple sizes. They're going to come in the large, the medium, and the small. They're going to have varying degrees of risk versus rewards. But the global market can add an extraordinary amount of diversification into your portfolio. A lot of people are not looking at global markets, so there's a ton of information out there right now. It's much easier to operate on the New York Stock Exchange or the Nasdaq because you're hearing about them, you're reading about them. Friends and family are more involved in those, but global markets are a great way to not only diversify, but make a heck of a lot of money as well. So definitely take a deep dive. Lastly, we're going to talk about global fixed income. Just as global markets are to U.S. equities, global fixed income is to bonds. It's the same basic idea, guys. This is just on the international market. Guys, so as you can see, there's a lot of different asset classes out there. We've just covered a handful out here today. We're going to continue to bring this content on the channel. Drop some comments below if there's something we missed, something you want us to do a deeper dive into. But we hope this has opened your eyes out there on the many different ways where you can diversify your portfolio. Guys, more than ever, in my humble opinion, I like to spread my money out. I don't like like to have that kind of all eggs in one basket mentality because, if the bottom drops out of that, obviously you're stuck holding the bag on that. Go ahead and smash that thumbs up below if you like information like this. You want to see more of it. If you're a subscriber, thank you for joining us again. If you're not a subscriber, go ahead and hit that subscribe button. Tell friends, family. We're always looking for like-minded folks to come here on the channel. And of course, ding that bell below if you want notifications as we are bringing additional information out here to the masses on the VIP Financial Education YouTube channel, where we talk about all things credit, capital, and cash flow. Thanks for joining us. Until next time, take care and make it a great day. Thank you.